We've talked about the term safe haven a lot on the show. I want to just get your thoughts on how you really define what a safe haven asset is. Is it something that is affected by investor psychology? Is it determined by market sentiment? Is it simply determined by looking at price volatility, something that has a low standard deviation of movement? What do you look at? How do you define what a safe haven asset is?
What a safe haven asset is begins with who you are, how you react to risk, and how you react to opportunity. For me, volatility is a tool, not a risk. I believe in that sense in the Buffett maxim that you shouldn't buy a stock if you don't know enough about it that you wouldn't be delighted to see it fall 30% in price the month after you bought it, so you could buy it much more, having expended the intellectual capital that caused you to buy it. He also says, of course, that you shouldn't buy a single share in a company where you wouldn't buy all of them if you had the means. Over time, buying extremely high quality companies and letting time work for you makes them a safe haven asset if you are an emotionally stable investor. For me, looking forward, this is going to sound like an odd statement, but in the near term, US dollar cash is a safe haven asset. That's an odd circumstance, given that I believe that the purchasing power of my US dollar denominated savings are going to go down. That being said, I consider the negative real interest rate to be an option premium on the ability that I will have to use that cash as a tool to buy assets when other investors panic. And I look at gold in the same circumstance. I look at gold as volatility, but good liquidity. So for me, in the context of the way that I construct my portfolio, gold is a safe haven asset. There will come a time when its price escalation relative to competing assets will make it less of a safe haven. Ironically, at that point in time, more people will regard it as a safe haven because its price has gone up. Cash, to me, is a safe haven asset, although you are guaranteed over time to lose your purchasing power in cash. In my lifetime, the best safe haven investments have been companies that outperformed competitors in their market segments that were run by honorable, hardworking, and intelligent people. Now, I have the experience and the emotional ability to withstand drops in share price and probably the experience to use those precipitous drops in share prices to increase my position in the underlying security. I know that many, many other investors and speculators don't have either the psychological or the financial capabilities to do that. For them, those assets, which might be safe haven assets, would be a very different subset of opportunities than for me. And those opportunities are becoming much more scarce.
Now, can you tell us about what exactly are these companies that you're referring to? Could gold equities fall into that category?
Yes, absolutely. There are people in the gold business that do a better job than others. I don't want to name names because I don't want the Kitco customer to think that I recommended a company to them without knowing who they are and what their means are. But in a very broad sense, I would suggest to you that the royalty and streaming companies, even the very biggest ones, are superior forms of business organization. I think that there are company builders in the space that have a 10 or 15 year track record of capital allocation that is superior to their peers. Gold company managements remind me of that old Hollywood movie, The Good, the Bad, and the Ugly. And there is a population of all of them. And what makes a good one is fairly easy to define. Coming all the way down into the speculative arena, I believe, well, to be honest with you, all the money that I invest intelligently now I made by speculating. And there are good speculations. The key to a good speculation, more than in any other kind of company, is good management teams. When I look back as an example to a 40-year relationship with my friend Ross Beatty, I have participated in 13 investments with Ross Beatty and lost money precisely once. But frankly, in every Ross Beatty stock I ever owned, and I owned several that went 10 for 1, I experienced a 50% price decline during some period of time when I held the stock. That's instructive. It means that you must hang out with the best people because they can come back from a calamitous circumstance. It also means that you have enough faith in them that you won't be shaken out in that circumstance. And so I really do think that the attributes of what a safe haven investment is depend almost as much on the investor as they do on the opportunity that you discuss.
You mentioned that cash is a safe haven asset in the short term. How much faith are you putting in the U.S. dollar denominated form of fiat currency? Do you see another currency in the short to medium term surpassing the dollar as the default fiat currency of the globe?
I do not. I think for all the problems that the United States has, it is the deepest, the most transparent, and the most liquid market in the world. I'm not saying that the U.S. economy and certainly the U.S. political system are admirable. What I'm saying is, to quote Doug Casey, we're the prettiest mare at the slaughterhouse.
Okay.
I believe that the ability to have cash to take advantage of volatility outweighs the disutility of the negative interest rates, the fact that you will lose purchasing power on your savings. We are literally between a rock and a hard place here, and one must do one's best with the circumstances at hand. I think that the US dollar will be volatile too, looking at the political landscape in the United States, looking at what I would say is the probability of a credit default cycle in the United States, looking at the social discord in the United States, the increasing even lack of civility in the discussion of public policy issues in the United States. These are broad problems. It's just that in terms of problems, we're not alone. Sprott has, and I don't want to name them, a very large Asian sovereign wealth fund as a client. And I remember talking to a portfolio manager from that sovereign wealth fund about U.S. Treasury securities. And I suggested that with the declining credit quality of the United States and the interest rate on the Treasury relative to the depreciation in purchasing power, that one might regard the U.S. Treasury as a lie. And I will never forget this portfolio manager looking at me, smiling, and saying, "What you say is true, of course, but it's a deep and liquid lie, unlike all of the other lies we are told." I then asked him, "Do you trust us?" And he said, "Oh, no. But we trust you more than we trust each other." And I think that that's the great truth of the US dollar relative to other currencies, and the efficacy of holding one's nose and storing one's liquidity mostly in US dollars.
Finally, Rick, I wanted to get your thoughts on gold. Last time you were on the show 2 months ago, you were bullish. Prices have, gone up since then, testing the $1,800 resistance level. How do you feel about current price levels? Do you think it's overvalued?
I do not think it's overvalued, but I think it might be in the near term overpriced. The truth is that gold bull markets historically have been extraordinarily volatile. It wouldn't surprise me to see gold go to 1900. It wouldn't surprise me to see it go to 1650. If you ask me my gold price outlook over the 2-year or 3-year term, I'm bullish to the point of being wildly bullish. When you ask me my gold price outlook over the next 2 months, my suspicion is that it might have come too far, too fast. Buffett, again, famously says, in the near term, markets are voting machines. They measure psychology. In the long term, markets are weighing machines. They measure value. The value of gold relative to the US dollar, I think in the next 2 to 3 years can only go higher, higher still in most competing currencies. But in the near term, because it's a measure of psychology, anything can happen. If you, as an example, are comfortable always with the way your fellow countrymen vote, perhaps you think in the near term that gold is appropriately priced. In my 45 years of watching people vote, I don't have much confidence in mass psychology as a way to getting at the truth. So I believe in the intermediate term, gold goes higher, probably much higher. In the near term, I have no idea.
Well, fantastic. I think that's a fair assessment. Thank you very much, Rick, for coming on the show today.
Always a pleasure. If I might offer one more thing to your viewers, we've done this before. The most use I can be to a Kitco viewer is to review his or her mining stock portfolio. Any of your viewers who want to send me a copy of their mining stock portfolio to sprottusa.com/rankings, no obligation. I will email back my evaluation of the companies in your portfolio with comments where I think my comments are appropriate. And I will include in that a 45-year gold equities market chart, which is very illuminating in the topics that we've talked about today, and a special 100-year commodity chart, which will put commodity valuations relative to other valuations in the economy in very obvious focus. And David, I want to thank you one more time for making your audience available to me and for preparing as well as you have for this interview.
Rick, my pleasure as always. And thank you for offering the opportunity to our audience. I'm sure they'll appreciate it.
Thank you.
Have a good day, Rick. And thank you for watching Kitco News. We'll have much more for you. Stay tuned.